StockMentor.com studios here in the beautiful Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. And we saw gap up to start the day, and that puts us now back up and above this little potential inverse head and shoulders that we had from the weekend. It now is broken. So the bulls proved it. We were talking about make the bulls prove it. They did. You can see the run up. Difficult trading today from the standpoint of where we started the gap. There was a quick run to start the day, and then we just kind of bled out the rest of the day. We didn't really go anywhere at that point. As you can see, we have move up, pull back, move up, pull back, move up. Just another pullback coming back into this little what should act as support here at the 12,000 area that we talked about. Could lead to more bullishness coming into the markets. Now, this is kind of an odd place to see this little pullback here. It's kind of in the middle of nowhere. But let's flip over here to the daily, and you can see exactly what really stopped it. This is more indicative of where we went. Right back into these moving averages up here. Now, by the end of the day, bulls able to keep it in between the moving averages. They didn't get shoved back below it. You can see it holding very nicely. If this inverse head and shoulders is correct, targets of around 12.2 to 12.3, I'd put it, in a more conservative type of a basis. I don't like to get too overly zealous, but based on the inverse head and shoulders, we could see, or I would be targeting a 12.2 to 12.3 type of a range by the time this is all over with, if that bullishness continues. Question is, will it continue in a more mild manner, which is running up and through, or will it gap up and through this? The gaps are very difficult, guys. So if we see another gap tomorrow, look to see where it starts the day. Is it going to start it way up here? At that point, you've got a decision. It makes it very, very difficult to trade when we see these big gaps, just as it did today. Watch where it gaps to very closely. NASDAQ, look, got the move up today right into this overhead resistance. Tried a couple times, could not push past it. So stuck right at and around that 2270 area and really kind of the 2280-ish area. If we go right to the daily, you can see what we're really up against, and that's this overhead area. So stopped right at that line, working perfectly right now. Really, if you want to look for some overhead opportunities, I'd really let it break this 2275 to 2280-ish is where I would put that if you're looking for some entries. As you can see, this could be now completing what would maybe be a ABC type of a correction. Still a little early to tell. I mean, at this point, that's what it looks like. It does look like maybe it's just a little ABC type of a correction. And for the most part, we have to kind of go along those lines until otherwise proven. That's right. So back above 2280, we're looking at this 2300-ish area. Here we are with the drop. This could also be maybe a 1. This is ABC 2. Now we're into some sort of a 3. This could be a 4 before a 5 down. Can you see where we're really in from an Elliott wave standpoint? If any of you guys follow it, it's not that clear. Some people might try to make it clear, but believe me, as always, Elliott wave are very subject to change at a moment's notice from a count standpoint. So I do have, by the way, I'll be putting up the ad sometime this afternoon on the right side of my page. But the Elliott Wave webinar is set for March 31st at 9 p.m. Eastern Time, for those of you interested in that. $49 for this first session. We'll see how it goes. And we're getting into more of the basic to intermediate type Elliott wave information. So for those of you that don't understand it or would like a little bit of help with it, this is the perfect opportunity for you to jump in at a very, what I feel is a very, very reasonable price and get some one-on-one work. Well, you'll be in a group, but it's basically one-on-one work with an actual human on the other end, as opposed to reading a book or not being able to ask questions. You'll be able to ask questions. We'll be able to go through things one at a time. I'm really actually looking forward to it. So you can sign up for that now and be ready for it come March 31st, 9 p.m. Eastern. You'll see the ad later on today. You can click on that and sign up via PayPal. If you don't want to deal with PayPal, write me an email and we'll do it over the phone, or you can send me a check or whatever. So here we are stuck in a very, very, very odd time. This could be one of two different things playing out. Okay, so we have to wait for more confirmation. We don't have a good grasp yet on where we are Elliott wave wise. I will certainly not jump to conclusions by any stretch until we get that confirmation. So let's continue to watch what we're looking at right here, and that is overhead resistance and lower support. Looking for the NASDAQ to break up and above that 2280-ish mark, and now maybe we have something else to work off of. From a weekly too, we just started, but we're still hidden below this thing. I'm not going to worry about it. It's first day of the week. SPX 60-minute, look at this nice high base. How many times have we seen this? It's been a while since I've been able to say high base, but we're there. Move up, pull back, move up, pull back, move up, high base. That's still very bullish. Got above that 1290 area, launched us right into the 1300 area, and hit that overhead resistance we were talking about. Once again, 1300. Good resistance up here. Where are we at? Flip over to the daily and right back up into these moving averages. So 1300 to 1305, still something to watch going forward, especially into tomorrow. What's a good way to get this to get above this? Gap it. Look for potential gaps and look where they start the day. Those will be the two more major items to be watching now as we push into tomorrow's trading. VIX way down, back into this 1920-ish area. Are we still above 1920? Well, obviously we are. Back into the support area, but you can see the VIX falling out very hard today. So while we spiked to 31, we're back into the 20-ish range. From a weekly, we've got a ways to go before we can really call this, down in these areas. A lot of week left, but we are back into the 1920 area. Still a little bit more bearish in my mind, honestly, until we get back below these areas here. However, a big move down like this within the VIX can indicate some further movement left to the upside for the bulls and downside in the VIX. This is what to be watching over the next couple days as well. Do we get confirmation within the VIX with what we're seeing in the markets? Apple 60-minute got way up. It's up $8, almost 9 buckaroonies today off of this bounce, but look what happened. The gap. Now the gap happened at where? Very logical spot, sitting right on top of the support, run straight up the rest of the day, but did not break the overhead levels I was really looking for from a more major trade, and that is above that 337 to 340-ish area. For the more conservative, you might even want to wait for 342, 343 to start to get broken. You can front run it if you want to. Need to be a little bit more cautious, but you can see we did get back above this area of overhead resistance here, and we did close above it. I don't like the participation on the day, but right now it's still sideways. You see the big push here, then a push up, then a push down, then a push up. So we're still wandering sideways, but no bigger push for me yet. We get back above that 340 or 343-ish area. I think you can play that right back into 345 to 346 for your more major area. Weekly above the 20, won't talk about that yet too early. FAS and FAZ, not much to talk about here. Gap up and a slow run down made for not much, if any, trading to be done at all within these two particular ETFs. Wanted to push up and above 29, but I didn't want to gap up and above it. And you can see we went nowhere today, so looking for pushes above these moving averages here, or maybe even back below 29 if you want to get aggressive on a short. From an FAZ standpoint, here we are wandering our way sideways here, and bigger picture, still stuck in this channel up and this channel down are starting to see a convergence here right at this point. So you want to be looking for pushes one way or the other. I'm still more bearish below this 40-ish area, and a little bit to get aggressive, guys, above 43, yeah, above 44, that's pretty aggressive. I really, for the more conservative, you want to wait for it to push back up and out of this area here, above that 46 mark, before you really start to get any kind of aggressive on a long here. Yeah, I think that is the safest way to play this. That's what I would recommend you do going forward. Okay, that'll wrap it up for today's. One really quick thing, and this is what I took off of last week's video. Now, yesterday I told you that I took sell off of my charts. It was wandering between these two areas right here. I was waiting for a break one way or the other. We didn't get it. I told my subscribers to be on watch for this coming into the week. I was just tired of waiting for it. And I gave you guys the entry for this yesterday as well. And we got it today. Below 1165 was my entry to the short side for my subscribers. And also for anybody that watched the video yesterday, back below these levels were the place to get short. So the short entry was hit today, giving you good opportunities to play this thing to the short side, and could have made a good dollar plus on just today's move alone. So we finally got the break. Of course, it's the day after I take it off of the subscribers video, but I did tell them to watch it, so hopefully some of them caught it. I'll have to bring it up to them today. Dole was one we took off of last week too. We got no movement on this, so I can't give you a plus or a minus on this either way, to be quite honest. There was no play on this last week. I just took it off. I'm tired of waiting around for it. GE, there's better trades out there. Same thing. We caught this low. We caught this short below 1975 last week, and then I took it off as of Friday. That was where we got out. So we made at least 50 cents on this, some more. GE Weekly. This was our target down here around the $19 area because of the 20-week moving average. So we played that one pretty well last week. PDCO was one below 32. Oops, went backwards on that one. PDCO was one I took below 32 last week. Made a little bit of money on this by the end of the week. By the time it was all over, somewhere between 50 cents and a dollar by the time the week was over. Then we took this one off. But this one was short last week for a little bit of gain. And that one in SLGN on a 60-minute. This was a no trade. We wanted it short below 36, but we got a gap below 36, which gave us nothing to do last week. This one has some potential to the upside right here, but I got some better trades going on for the subscribers. A couple of them are setting up to break here. Either they broke today or they should break tomorrow. So no trade on this one either last week, but we had a couple that moved. We had a couple that didn't move. I want to make sure I show you guys what's on the subscribers video from week to week, what I'm taking off, and what we were looking at so that you guys have an idea, if you're curious about the subscribers newsletter, what is shown and what isn't. So obviously individual stock trades like this, along with entries, exits, stops, potential target areas, are all given to the subscribers. I give them intraday updates in most cases. They got another one today. Those have been going out now between 3 and 4 times a week to give people updates on what's going in. What's going on in the current markets from like a midday standpoint. And I talk about the Russells, I talk about gold and oil, and there's a ton of other lines drawn on the charts for the subscribers. So if you guys are curious about it, recommend you give it a whirl. The information I think is really, really good for $1 a day. It's well worth it. Certainly worth your trading and saves you tons of time because I give you entries and exits and individual stocks to watch during the course of a week, which is stuff you don't have to do for yourself then over the weekend, which allows you more time with your family or to spend doing something else. All right, guys, we'll see you again probably tomorrow. Bye.